All right, today is Fed decision day. I'm a little, I gotta tell you, I'm a little surprised with the market being up the way it is, especially prior to the Fed announcement, right? So the Nasdaq is up almost 2%, the S&P is up 1%. I expected somewhat of a subdued market up until we got that announcement, but that said, I think 75 basis points is probably baked into the market at this point. In fact, I'll go as far as to say if the Fed doesn't do the 75, say they only do 50 basis points, I think that's going to be a negative for the stock market. So I'm thinking that a lot of this is baked in. I certainly think that Jerome Powell is going to signify, increased inflation risk, increased risk to the unemployment rate going up. I think he's going to leave 75 basis points on the table even for the next meeting. I think all of that is kind of baked into the stocks right now. And certainly you're seeing some effect, right? You're seeing mortgage applications have come down. You're seeing used car sales come down. You're seeing the retail sales numbers come down. You're seeing in a lot of the retailers' earnings that they're just that there's been a slowdown. So what they're doing, I think, is having an effect. So maybe he can point out that, what they're doing is starting to work. So I think a lot of this could be calming for the market. So I went ahead and I'm preparing for what I think is going to be a rally once this Fed meeting is over. I mean, we're already rallying now, but I think there could be a continuation unless something crazy happens. Again, if he does only 50 basis points, that can be construed as negative. I think the one X factor is going to be their communications. In one of his previous address to the media, he said that the 75 basis points were off the table, and then he kind of speculation is that it was leaked out to the media that they can do 75 at this meeting. So maybe there might be some questioning on his communication methods. That could be an X factor in this thing. But for the most part, I think the market is kind of baking in all of this bad news. So I took some more profits today to the downside, and I left my upside bias positions in place to see where it shakes out. So after today, there's about $126,000 of booked profits so far this month. So I do have some room to be wrong, not to be cavalier about my decision here, but I have a little bit of comfort zone. All right, so here's Charter Communications, CHTR. We went along the puts. You can see the market has been trending down. It's been riding its 20-day moving average lower. It came up here, tested the 50-day moving average. MACD was rolling over. We went ahead, went long the puts. I closed them out today. So with the Charter, we had bought the July 15th puts, $490 strike price. We paid $20.50. I got out of them for 41 bucks. It's about 100% return on the trade. Here's Nike, similar looking chart, right in a downtrend following its 50-day down. As it was hitting its 50-day and rolling over, MACD was rolling over. We went long the puts, and I ended up closing them out. So here we have the Nike puts. We did them on June 7th. We had bought the July 22nd puts, $119 strike price. We paid $6.35 for them today. I sold them for $9.65. It's about a 52% return on the trade. All right, here's Darden Restaurant. Another stock that's been in a downtrend. It was hitting its 50-day. It started to roll over. We went ahead. We went long the puts here. So on June 8th, we had bought puts. These are the DRI, July 15th, $125 strike price. We paid $7.30 for them today. We sold them for $11.30. It's about a 55% return on the trade. This is CBOE, Global Markets, ticker symbol CBOE, same thing. Stock has been trending down, hitting its 50-day and bouncing down to the downside. It's acting as resistance. We're rolling over. MACD was rolling over. We went long the puts. So on June 8th, we bought the puts on CBOE. These were the July 22nd, $114 puts. We paid $4.50, and I sold them today for $7.20. It's a 60% return on that trade. Here is Rockwell Automation, ticker symbol ROK. Stock has been in a downtrend, hitting its 50-day and bouncing down. The 50-day was acting as resistance, had this huge gap down. Miserable, came up, kind of filled where I thought I might have tried to fill the gap, but it kind of came up to where it gapped. And then the MACD started rolling over. We went long the puts, and I ended up taking the profits. So here's ROK on June 7th. We had bought the puts. These were July 15th, $210 puts, we paid $7.20. I got out of them for $14.50. It's about 101% return on that trade. So I got this CarMax straddle. I put this on a few days ago, and I forgot to do an update for it. So just I'm taking a look at this. It's been consolidating here, and I'm expecting a move up to the upside or the downside either way. So I took on this neutral position with the straddle. So here I bought the July 15th $90 strike price puts for $6.75, and I also bought the July 15th $90 strike price calls for $6.70. Again, my neutral position, I just want this thing to open up and have some volatility enter the name. So one more here. This is one that I forgot to update. I had put in an order to buy puts. This was on Caesars Entertainment, CZR, and I did this on the 10th of June. I really did. I only got 2 contracts off. I didn't get filled. I wish I would have got filled on more, because I ended up buying 2 contracts. That was the July 22nd $50 strike price for $4.95, and I managed to get out at $11.40. So that's about 130% return. But again, you know, I only got 2 contracts, so I only had about $1,000 at risk there. So it doesn't really impact my P&L too much. I certainly wish I had more off. So that's where we are. I have the position you can see here. Lots of upward bias. Let's see if the Fed announcement today will act as a lift, at least a temporary lift to the market. I'm prepared. If not, I have some work to do and reestablish some downside bias. Stay tuned. Let's see what the Fed does. Thanks.